Hello, everybody. Thank you very much for joining us today for our next episode, Learning from Experts. Today, me and our mortgage broker, Sal Tomaselli, is going to discuss what's happening in the real estate world and the financial. Hi, Sal. Thank you very much for
Hi,
coming.
Eugene. Thanks for having me on. I appreciate it.
My
Um,
pleasure. My pleasure.
Thank you.
So today is March 13. Our real estate starts showing that the usual spring market is not here yet. We don't have that much buyers out there looking for homes. Um, the inventory is still extremely low, and as far as the numbers, as far as the reasons for that, it seems like the inventory is still going to be an issue. More than 70% of homeowners currently have a real interest rate mortgage under four, around four, and this is one of the reasons for a very extremely low inventory, and this is why there's nothing out there to show our buyers. As far as mortgage rates today, in my understanding, we're going around under 7, a little over 7. But to get more insights on that motion, we decided again to ask Sal and explain what's happening and what to expect moving forward.
All right. Well, I'll give you a brief update. Thank you again for having me on. I really appreciate being part of this educational experience. So, hello, everybody. My name's Sal Tomaselli. I'm the owner of Professional Mortgage Solutions. We're a mortgage brokerage firm located in Rego Park. We're licensed in New York and Florida. Basically, interest rates they're on a downward trajectory at present. Slight little hiccups along the way, which drive it up slightly. A lot of our client base and former clients and you know clients that are looking for homes subscribe to our weekly market update. The market update basically just gives you an indicator of where the interest rates are at any given time. This week, the focus was on the consumer price index, which came in slightly higher, which essentially caused the market to come up a very, very small amount. But the good news is we're still under 7% at this point, which is, very promising because at the high we were at about 8% a couple of months ago, and now the rates have dropped down. And I'll show you what our market update report looks like. I'll share my screen. So this is my weekly market update that we send out to our clients and potential clients, anybody who's who pre-quals with us. And essentially, first screen that after the initial page, basically we show where the national mortgage rate is. Right now, it's at about 6.92%. That holds pretty true for the New York area as well. And the next page basically indicates the change that took place. So you see a very small increase in the 30-year fixed rate of 0.05%, which is very, very small. Why did this happen? This happened because the consumer price, basically two reasons. There are many reasons, but there's basically two reasons. Inflation came in a little bit higher than expected. Came in at around 3.8% on the year-to-year comparison. Where we were last year this time versus where we are today. And the Federal Reserve also indicated that they're probably not going to start lowering interest rates till about July, which is about another 3 months, 4 months from now. So for the next FOMC, for the FOMC meeting in July, they anticipate the first interest rate reduction And, the speculation is maybe there'll be, 2 interest rate reductions. They're saying as many as 4. It's highly unlikely that there will be 4 before the end of the year. But I suspect that, if they do start dropping interest rates, we'll probably have 2 to 3 reductions in the Fed rate funds. So that would, again, all of this is already kind of factored into the marketplace, so this is how the market reacted to that news. And there was a slight uptick, and I think it was a slight uptick just because of the inflation number. Good news is we are headed downward. We are headed back towards what we'll call more reasonable pricing, okay, which will make homes more affordable. As you've said earlier, Eugene, there's still very, very low inventory out there. And when there's low inventory, it will hold prices up. The fact that interest rates have gone close to 7, I think have held prices from continuing to increase. I think they've stayed kind of, it went high and then it's just running like kind of a straight line, flat line. I don't think you're seeing many increases in sales prices at this point, but we're not seeing decreases either. Is that an accurate statement?
Yes, I would say so. Absolutely. Yes, this is an accurate statement. And then as far as the beginning of this year, the appreciation is going back to approximately anywhere between 3 to 5%, depending on the property type and location. So basically, we're back to normal, and we would, as far as the appreciation of real estate, we expect this number to be continuing this year as well. So the price is definitely not going down at all. This is for sure.
Well, the good news is we'll probably see lower interest rates as time, as the next couple of months go by. And finding a home takes some time. Obviously, I think the average. What would you say the average time is that you spend with a client?
These days, well, usually at this time, it's anywhere between 60 days to 90 days.
So that's great. So that
approximately.
Kind of
so this is because of the balance of not too many buyers out there looking for homes and still not too many homes to sell. So it seems like, again, the number of days on the market that the property spends before we can find the buyer shows like the market is actually pretty strong overall because of this balance between the supply and demand. But let me ask you this, as far as the big picture, let's say the whole 2024 year, if you look at moving forward. I just came from the real estate conference, and many professionals that we used to trust their opinion, they say that 2024 will be the year of 5%. Second part.
I would hope.
Do you think it's a reasonable assumption? Do you think what can you comment on that?
I think like I said earlier, the first, if we see a Fed rate cut, the first one that we'll see won't happen before July, more than likely. And is it conceivable that we are going to go from 7, a prime is 8% right now, and the cuts are relatively small when they make it. So do I anticipate seeing a 5% interest rate? Possibly, but I don't think it'll go down that low. I mean, maybe it'll get into the 5s.
No, I mean, anywhere between in 5s. Let's put it this way: 5 to 6.
Correct. So is it possible?
And steady, not just hit that button and just go back to 7, but steadily go under 6 and stay there for a reasonable amount of time.
I mean, that's dependent.
Do you think?
Yeah, I mean, do I think it's possible? First of all, let me correct something. earlier I said 8%. It's actually prime rate right now is at 8.5%. Right. So, if the Fed makes cuts, they usually will cut, a quarter of a percent or thereabout. So, as those cuts come through, and if they start in July, the market could react to it, and would react to it, and the rates would more than likely get driven downward. So do I think we'll see a rate in the fives by the end of 2024? It's possible, but I think it's more reasonable to believe that it's going to be in the high
in the
fives.
sixes,
Yeah,
high fives.
Low.
But still, it's better than 7.
Which it's better than 7, and historically, that's still a fantastic rate to borrow money at. So it's we just were spoiled in the last 5 years or so because of extremely low interest rates. But a 5% rate is
and a lot of people still believe it's possible that this would happen again, and it's really hard to argue with them, and it's hard to take this away from them, this dream number. It's really hard to take this away from them.
Well, what I always tell the clients is that the interest rate is interchangeable. The idea is, one thing is for sure, real estate, especially in our markets, in the downstate New York market, historically goes up, and very rarely goes down. You look at homes that were selling for 200,000 and now they're 800,000.
Right.
So you're not going to see a retraction. We're not, New York is downstate New York is not a volatile market like that. So one thing is for sure, as time marches on, values will increase, and
it's still a good investment. Yes.
Yeah. And so if you have to get in the game, you have to buy something. If you qualify at 7% or 6.8 or 6.9%, you're also going to qualify at 5.5%. So what we do is, for clients, we monitor the interest rates, and when we see that it's advantageous to refinance their loans, we do so, and there's a huge windfall of savings. So if you're used to paying $3,000 a month for your mortgage, and now it's going to become $2,000 or $2,200, and you're saving $800 a month, those are significant savings that we pass along. The only way you're going to take advantage of that is you have to kind of get into the game, purchase the property, and the other effect that will take place more than likely is interest rates, when they drop, values will go up again.
Go up, of course. Yeah. Especially considering the inventory. Yes.
Right. So, that's the other thing to consider, because you could say, wow, I could have bought that property for 800 and now it's selling at 900.
And we'll be back to bidding wars, lines for the open house to get inside.
So, very important to get in the game, get involved, and if you're someone that wants to be a homeowner, and homeownership is so important, it's a great investment, real estate in the New York City area. The idea is if you can afford it at the current rates, you're going to be pleasantly surprised.
Yeah. So, and if you see something you like, you should buy it.
You should buy it. That's right.
Okay.
That's it. So
thank you.
Thanks, Eugene. Thanks for having me on today. Appreciate it.
Absolutely. My pleasure. Thank you very much for coming today. Everybody, again, thank you guys for joining us today. I'm a real estate agent with Coldwell Banker Real Estate. If you have any questions about real estate, my contact information here attached below this video. If you have any questions, you want to talk about mortgage and financial situation, please, again, talk to Sal directly as well. And we'll see you next month. Thank you.
Thanks, everybody. Take care. Bye-bye.
Bye-bye.
Bye.